Good morning and welcome to the VSA Morning Miner. It's Monday, the 20th of March. I'm back from holiday and I'm joined by Paul Rankin as Andrew is still out in Dubai. Paul, how are you doing today?
Very fine, thank you. Very fine. Welcome back.
Thank you. Right, let's get straight into the news. Where do you want to start?
Start off here with Ionic Rare Earths, which is the dual-listed rare earth explorer in Uganda. Late Friday, they released a Phase 1 DFS on their Makautu rare earth clay project. Looking pretty strong numbers here for what would be a modified heap leach operation. Phase 1 would be about a 35-year mine life, so not a small deposit or a short life one either. 5 million tons per annum would be the processing run rate, and it would produce in the order of less than 2,000 tons of rare earths per annum. 40,000 tons of rare earth equivalent production, with 71% of that being in the magnet plus heavy rare earth content. Post-tax NPV 8 of 406 million US, and it works out to an IRR in excess of 30%. So all the numbers are looking on the good column here. So payback the period on Phase 1 should be within a 3-year time frame. So looking very good there.
Yeah, and that capex manageable for a junior to finance on its own, or should be. So yeah, good to see more good progress at Ionic. Interim results from Jubilee Metals today.
Yes, that's right. Group revenues for the interim period ended December 31 for this African PGMs and base metal producer, 63 million sterling, where PGM and chrome sales were 58 million of that, and copper sales were 5 million of it. Copper output was less than what was prognosis, so it underperformed in that regard because they did have a slower than expected ramp up here on the Rhone project at this point. So definitely some improvement to be made during this coming half year in order to try to get the Rhone concentrator working up to design capacity. Continued investments of 24.1 million sterling in copper and cobalt expansions. Closing cash position for the half year came in at 11.7 million, so down about 5 million from the June half year. Net cost copper per ton production cost $5,232 US, whereas the PGMs and chrome costs were at US $608 per ounce.
Yeah, and as a result of that slower ramp up, they've cut copper guidance for the year to 3,000 tons, but elsewhere looks like the outlook's unchanged. As in that higher operational cash flow all being spent on the expansion program, but good that that's substantially funded from internal cash generation.
Yes, it doesn't look like they'll have to raise more funds, at least from what we can see here.
No. News out from Atlantic Lithium, directors' purchases and a exploration program update.
Yes, that's right. We got further detail on what the 2023 exploration will look like here on the Ghana properties, both within the Ewoya mine complex itself, but also the wider area of the Cape Coast licenses, which extend to the east and to the west of the Ewoya deposit licenses themselves. there will be about 10,000 meters of further drilling planned at Ewoyaa, of which 3,000 meters of it will be infill drilling on inferred resources on the Ewoyaa South 2 resource, and another 7,000 meters on extensions and testing nearby zones, as well as, and in addition, about 2,000 meters of diamond drilling in order to assess water monitoring, metallurgy, and resource twinning on RC holes for confirmations of grades and thicknesses on those. They still have the DFS and the front-end engineering work on the existing 35 million ton resources due for completion at the end of the second quarter this year.
Yep. And also some news out from Thor Exploration.
Yes, Thor Exploration, that's the dual-listed Nigerian gold producer, as well as with a sizable gold deposit project in Senegal. The news out today specifically about the Senegal property, and that's called Douta, coming in with almost 1.7 million ounces of resources, which is in both indicated and inferred. So that deposit looking very strong here. And just to remind investors, that's quite a lot bigger in initial resources for the Douta project than what had been the resources on their project in Nigeria. We're looking at grades are about 1.3 grams per ton on the indicated resources and 1.2 on the inferred. So it's definitely strong enough project here for a heap leach or potentially some milling component as well in due course. For 2023, they expect to drill about 65,000 meters of additional drilling.
Excellent. Okay. Anything else, Paul?
That will do for today.
All right. Thanks very much. We'll be back tomorrow.
See you then.